You were listening to chartingwealth.com for Thursday, the 18th of August, 2016. Let's jump right into IYY. That is the total market, and it's exchange traded fund that tracks the whole market. And what do we see going on with the whole market? Well, our two-day trend line has been violated by the first day of the latest two-day candle on the 17th of August. Prior to that, we had 4 up candles after 2 down candles back on the 2nd and the 4th of August. Our up candles on the 8th, 10th, 12th, and 16th have been violated. We now have our two-day trend line no good anymore. We're getting close to a crossover going down. Actually, the market was up on the day for the 17th, but we use our Hinkin-Ashi candlesticks because they show us the average pace, and they have shown us the average pace has changed. We now have a red down candle with a down wick. It is a warning to us. We don't yet have a crossing over going down, but the MACD and the signal line are right at it. The derivative oscillator is still in the positive, but it has reduced also. So we may have a system-wide down on the way. We will have to see. We may have a bounce off the signal line. We don't confirm it yet, but be aware. What do we see going on our 4-hour chart? We see lots of down movement in the morning, some up movement in the afternoon. Our two-day trend line has been violated by the close. We also saw on the afternoon of the 16th, the total market crossed over the 4-hour chart going down, and the next morning, that is on the 17th, we saw a red derivative oscillator, large one followed by another red derivative oscillator in the afternoon. Now let's go back to our two-day trend line, and we will take a look at the S&P 500 as depicted by SPY. Looks very similar. Two-day trend line has been violated, very similar to the total market. Very close to a crossover on the MACD. Hasn't occurred yet. Derivative oscillator still in the positive, but getting close. When we look on our 4-hour chart, what do we see? Same thing, down movement strong in the morning, some up movement in the afternoon. For the record, the S&P 500 up for the day, 0.19%, but our candlesticks and our derivative oscillators are showing us something different along with the MACD and the signal line. So that is where we are. Be forewarned, forearmed. All right, lastly, as far as our indexes go before we get to gold, I'm going to look at the Qs. What do we see? The Qs has been the strongest index. Started going up actually back on the 29th of June, crossed over going up on the 11th of July, and has been spinning up, but for a little pullback on the two-day chart back on the 4th, and that was just indecision. That is the 4th of August. Continuing to move up, what do we have? Well, the candle again, the first day of the two-day candle, we have a doji, lots of indecision, market closed below the two-day trend line. Now, could it close above the two-day trend line tomorrow? Yes, it could. The market could go up. We don't have a crossover going down yet on any of these charts, so we're not calling that. Derivative oscillators lost a lot of speed, lots of indecision in the marketplace. Remember us telling you earlier in the week, actually at the end of the week on the weekly review and forecast, that Wednesday was the day that there was going to be the Fed minutes released, and that could have a big impact on the market. Remember that warning? That's why we do the weekly review and forecast, why you need to listen to it every week. Mark that information down on your daily worksheet. This is important stuff. That's why we tell it to you and warn you about it. All right, let's keep moving. We're going to look at what's happened on the 4-hour chart. Again, looks very similar to the total market and the S&P 500. We had a crossover, however, way back on the 4-hour chart, the half day, back on the 12th of August. And even though we've had some up moves on the Qs, we've continued to see downward progress, haven't had a cross back over on our 4-hour chart. Lots of down movement in the morning, huge derivative oscillator movement, and we saw the MACD and the signal line break down. So that is where we are. We are, again, looking at some potential massive down movement. Hasn't happened yet, but we're continuing to watch and be forewarned and forearmed. Now, lastly, we're going to go to gold. Oh, and for the record, the Q's up for the day 0.15%. S&P 500 up 0.19%. IYY up 0.15%. Gold down 0.01, 0.1%. What's gold really been doing? Well, if we look at our 2-day chart, we can see gold has been sliding sideways. Hard to draw much of a 2-day trend line because of just the sideways slide in gold. What do we see happening? Well, consequently, when the market moves sideways, the Bollinger Bands move in because volatility decreases. Gold is just slipping sideways. It's in a confirmed down move on the 2-day chart. Let's take a look at what the 4-hour chart's showing us. Trying to cross over, going up. We see some down movement in the morning on gold and a big doji in the afternoon. Lots of indecision. Technically, though, gold did cross over, going up in the afternoon on the 4-hour chart, as did our derivative oscillator in the morning. So pay attention to that. Again, if we can continue to get some movement more than just this sideways slide, gold may very well be on an up move for this 4-hour chart. Hopefully, we'll continue to see movement in gold. And what does that mean? Well, if we have some volatility in gold, you all have seen in the past how well this 4-hour chart works for a trading chart. That is where we are as we end the day. If you want to help us out here at chartingwealth.com, we love to hear from you. We love to hear what you need. We appreciate your emails. That's at Charting Wealth. Sign up for our newsletter. What do you get with that? You get our daily reviews. You also get our weekly review and forecast. You also get our layout. You also get our How to Read a Stock Chart video, and you get our daily worksheet. All that comes to you for free for going to Charting Wealth and signing up. If you want to help us out here, we appreciate the fact that you guys have gotten us as high as 6, 7 in the world as far as stock market podcasts go. Please go to iTunes, subscribe to our podcast there, give us a 5-star rating. Thank you so much for all you've done for us in the past. Please keep helping us out. One last request. We are getting closer every single day to 1,000 subscribers at our YouTube channel. We know thousands listen every week, but once we hit that 1,000 mark for hardcore subscribers, guess what happens? You will start receiving proprietary broadcasts that YouTube will allow us to then do. So help us out. Go there to YouTube, Charting Wealth's YouTube channel, and subscribe. We're also at Facebook, Twitter, Instagram, YouTube. We love to hear from you. Thank you so much. God bless from chartingwealth.com.